SMF Street Traders, we're going to be taking a look at the call to put spread ratio going into the September 16th earnings report that's happening during this options expiration, meaning that the options expiration starts on the 13th and ends on the 17th. They report after the close on the 16th. What we are going to take a look at here is the total volume of open interest. The call option for the $45 call that expires this Friday, you got 17,000 contracts open interest on the call. However, on the put side of the market, you've got 24,000 put contracts at the $45 strike price. Let us not forget that research in motion is the $45 put is about slightly in the money, and the $45 call is slightly out of the money. So basically, we closed at 44.12. Now, as we move through the week of options expiration and we get toward the 16th, just kind of like we said on that FedEx videos, SMF Street, that's the Dow Transports. Why are we featuring RIM? Because RIM is a stock that has been selling off extremely hard. We're going to take a look once I get off of this videotape. I'm going to give pricing structures on the $45 call, and I'm going to give you the prices off of the videotape on the $45 put. We're also going to cover a 10/16 put option on RIM, which is right here for October. I'm going to put that right there. That's at $1.32 by $1.34. What I'm also going to say is, let's take a look at the in the money $40 call. So if this is going to lose, we're going to take a look and see where this is. I'm sorry, that's the put. Let's put in the call. Put. Somehow I got the two in there. Hold on. What we're going to show you here, SMF Street, is there was 269 contracts traded, and this is a 10/16 $40 call that happens to be $40 in the money. We're going to take a look, on the other hand, down here is a $40 put that is out of the money, and this is 10/16. These are $1.32 by $1.34. Look at the open interest is 2,000 contracts traded. If you take a look at RIM $40 put in this row here, you got 4,936 contracts once again to the put side of RIM, where that $40 call that's in the money is a very minority with 420 contracts. We're going to cover all the pricing structure for October as well as the September expiration on September 16th when they come out with the earnings, and how to get on both sides. What I will show the MMTs, I'm going to move this over. These are the balances here. You got 17,000 contracts that people think that RIM is going higher on the expiration. You got 24,000, so there's the mathematical balance between the put and the call at both 45. That's that 918, 45 call and put. We're going to get down and do our work in the pricing model using the SMF options pricing model, its own direct options trading pricing model platform. So I'm going to conclude this tape after I show one more important thing. I'm going to move this out of the way for you, and we're going to take a look here. I need to put the $40 call that's deep, or the $40 put that's below the market. So let's get the $40 put here in this chart for you, which should be this one right here. That's the October $40 put. That's $4 below the market. And we're going to take a look at how deflated it had gotten and where this mathematical ratio balance lies. So we're going to cover everything now, and I'm going to come off of the tape. We're going to do that pricing model, and remember, RIM is, we're going to do a volatility trade up and out of the money against that put, just in case there's possibly an announcement that could come who knows when. Is Steve Ballmer at Microsoft CEO? Are they going to spend some of that Microsoft cash that sits on the balance sheet doing nobody any good? Are they going to take a run at RIM on an M&A activity to try to get in that space and develop a network from there? Well, guess what? That could happen. I'm not saying it's going to happen, but once again, in our risk management model, the SMF risk management model is how do we cover that side of an unexpected announcement? SMF Street Traders.